to the CSOP sharing on Tiger Broker platform. So before we start to explore the opportunities in Divergency, let me give you a quick introduction of ourselves, CSOP. So CSOP was established in Hong Kong for more than 10 years. And as of end of July, our total AUM exceed 15 billion US dollars. So we are not only one of the top issuer, ETF issuer in Asia, we also have the greatest amount of ETP, exchange traded products, and also our LNI products also dominate the market shares, no matter in terms of average daily turnover and also our AUM. So on the screen, you can see some of our flagship product, including 3033 and also some of the special products, for example, Saudi ETFs or Bitcoin futures ETF, etc. So let us focus on some of the key hot topics these days. So before talking about A-shares or Hong Kong market, let us give you an overview of the market review as of the end of September. You can see the Hang Seng Index and the Hang Seng Tech Index actually outperform many of the indices globally, including the S&P, the Nasdaq, or also the Nikkei. And we can see because some of the Chinese stimulus coming up by the end of September, that is why we can see the stock price or the market sentiment actually did very well by the end of September and also beginning of October. So we are expecting with more stimulus and more concrete plans coming up, the A-shares and Hong Kong market actually is going to do better or outperform most of the other regions. So we can also take a closer look at some of the monetary policies that are announced by the end of September. So the PBOC governor actually announced a set of policy easing measures on September 24th, including the RRR cut and also the MLF rate cut. And not only some of the policies some of the rate cuts, but also they provide more equity market support, including some of the how do you strengthen the liquidity by introducing the 5 billion RMB swap facilities for non-bank financial institutions, so then they can do more collateral, borrow money to enter into financial markets or do more of the investment. And one of the key policy easing is in terms of the property, it's the interest rate cut for existing mortgage and also the cut of down payment of the second home buyer. So these are the policies or stimulus that encourage investors or Chinese citizens to have more liquidity and invest into no matter stock market or increase their spending no matter but from the property side or also the consumption side. We can also see in the Bolero meeting in September, actually we talked about the monetary and physical policy and also the property. And the last one you can see here, the consumption and the labor market. So how does the Chinese authority boost the consumption by improving the livelihood? And also they would like to promote the income growth among the middle and low income income classes. Then that will help the country to achieve the consumption stimulus to have a 5% annual growth target by the end of this year. So we can see not only from the government side, the banking or the finance area side, but also the consumption side, the Chinese government tried different ways to strengthen or to encourage people to spend more, to trade more, for example, invest into different sectors, not only the stock markets and also the property market. And we can also see the RMB actually surge on the stimulus, especially after the Fed rate cut earlier in September. But we can see And by the mid-October, the RMB actually weakened as the US economy data outperform or as beat the estimates. But we can, as we foresee in the coming Q4, RMB will continue to strengthen, even though it's not a very steep level, but will not be as weak as before, given there are still two FOMC meetings coming up. And also we can see the as before, given there are still two FOMC meetings coming up. And also we can see the China yield spread actually is narrowing since beginning of this year. So if investors are interested in buying A shares or some of the RMB dominated asset, we think now is a very good opportunity or a nice price to buy in, because you are not only capturing or tracking the A shares performance, but also you are expecting an appreciation of the RMB in the near future. So today, we October the 17th, the 18th, we actually see more stimulus or more good news coming up for the A shares and the Hong Kong market. As President Xi mentioned, technology is one of the top priority to achieve Chinese modernization. So we can see many A shares indices or A shares related ETF outperform other products or other indices in the region. And some investor may ask, how can we tap into the Asia's market? Or how can we start to build our portfolio, including more A-shares related products? So we have some of the top picks ETF here. We can introduce to you all today, including our 2822. It's one of our flagship ETF tracking the FTSE A50. So the A50 index actually comprised of the largest 50 A-shares companies in terms of market cap. That are listed on the Shanghai and Shenzhen Stock Exchange. So this index actually heavily weighted on financials and consumer staples. And actually, it is one of the easiest way for foreign investor to tap into the Asia's market. For foreign investor, when they want to enter a stock market or a market they are not very familiar with, of course, they will choose some of the largest capital or a very well-known name to invest in. So 2822 actually on October 18th today, went up for more than 5%. And we can also first look into 3133. It's actually an ETF that tracks the CSI 300. CSI 300, I think most of our investors, most of our clients are more familiar with, or you heard of it or trade day-to-day these related products or even derivatives, because the CSI 300 actually replicates the performance of the top 300 stocks traded on the Shanghai Stock Exchange and the Shenzhen Stock Exchange. So compared to A50, CSI 300 actually are more scattered. They comparing to the A50 or a Star 50 or Chinex, because it includes more different sectors, including the financials, IT, technology, industrial, and also consumer staples. So today, 2822 and also 3133 actually went up for more than 5%. But if you can bear more risk or like to do some of the range bound trading, or you would like to have more volatility, you can also look into our Star 50 and Chinex product. For example, our 3109, which tracks the Star 50. They are more heavily weighted on tech stock. That is why when President Xi announced technology is a priority for China right now, you can see 3109 actually went up for more than 10%. It's around 14 to 15% today, and it one of the top holdings, top constituents is SMIC. It's weighted more than 10%. This is one of the top pick stock for investor in Hong Kong. I think it's very popular in China as well. So if you would like to buy some of the tech-related sector, I think 3109 is a very very good tool for you to enter the A-shares market. You do not have to put all your money into one single stock. You can use an ETF to lower your entry barrier as well as to diversify and to avoid some of the single name risk at the same time. And for Chinex, the 3147 is actually the for retail clients, maybe they are not as familiar as comparing to A50 or CSI 300 because it's only for professional investors for them to buy single stock in Chinex. But Chinex is actually includes some of the most innovative and also fast-growing enterprise, especially the high-tech firm. That is why Chinex and also Star 50, they actually outperform CSI 300 and A50 today, especially when the stimulus or the policies that encourage tech-related, these two are more the volatility or the sensitivity is relatively higher. So we can see that especially for retail clients, they cannot enter Chinex very easily with their because of their retail, because they're not PI. So 3147 actually help investors to enter the A-shares market very easily. And one of the top weighting single stock is CATL. I think many investors are very heard of it or very familiar with it, especially when they're talking about the auto sector. And the CATL in the Chinex is actually uptake around 20% of the index holding. And apart from the A-shares, we can also share with you the Hong Kong stock market, or what can you invest or look into when you would like to invest in Hong Kong tech stock. So from the stimulus came out last September, end of September, we can see our 3033, the Hang Seng Tech Index ETF actually went up for more than 30%. And if you use a leverage product, 7226, they actually went up for more than 76%. And we also highlight some of the key tech stock in Hong Kong, for example, Tencent, Alibaba, Meituan, Xiaomi, for you to have a look. You can see if you only buy into one single stock, maybe you will miss out some of the opportunity because the index actually outperform some of the single stock. Or if you use one single stock plus a leverage ETF, you can actually maximize your return in this short period of time. That is why we can see many clients nowadays, they use ETF plus 1 to 2 single stock for their portfolio. That will make your portfolio diversify, not only in invest into one single tech stock, but also you can track the whole index. You can went up by a larger amount, a larger percent, but the investment barrier, the entry, you can use a less capital, but also maximizing your return. And also we can see why tech stock or tech-related indices always outperform the Hang Seng Index, because Hang Seng Index, there are more all economy single stock, so they're not as sensitive or the volatility is relatively lower. That is why we can see the return during the same amount of period. So the 7226, our leveraged HS Tech product actually outperformed for more than 40% when comparing to the 7200, the HSL leverage product. So this one is a snapshot we showed yesterday when we did the Cantonese version with our target broker, because some of the investors are more cautious if the HSI will reaches the 20K mark. But we can see that actually the market sentiment is quite nice these days, and we can see there is a very supportive no matter from fund flow wise or the market sentiment wise. So in case if you would like to do some of the hedging or the inverse, we also have some of our inverse product for HSI or HS tag. So this one is just for your reference in case if you have some of the Tencent or Alibaba in case of the market but going down or the stimulus doesn't long last, or some of the investors think the stimulus will only strengthen the market for a short period of time, then you can consider some of the inverse or 7225 for your portfolio for some of the hedging. But overall, we see after the Chinese government, Chinese authority give a number of stimulus to strengthen the stock market, to strengthen the property market. We think that actually for now, A shares and Hong Kong shares related, especially the tech one, is suitable for clients to slowly put it into your portfolio. We think that because of the to avoid the single name risk and also to lower your capital entry, and we think that the ETF or leverage product is actually a very nice tool, or the you can put it in your portfolio, especially those we mentioned for the A shares. If you don't have it in your portfolio now, you can actually look into different sectors or different indices, which one or which sector you are more interested in or more positive, have confidence in, then you can use ETF to enter into Asia's market. Especially, it's a very easy. You can directly buy these ETFs on Tiger Broker. And if you have any questions, of course, you can leave a comment to us or reach out to some of the staff from Tiger Broker, or you can check out our CSOP official website that includes all the ETF underlyings, constituents, the weighting, and also the associated risk. So thank you for listening to our sharing today. We hope to bring more ideas or trading views, market outlook to you next time. Thank you and see you soon.